Today's lesson, we are going to be looking at one of the very important topics in accounting. It is centered on petty cash book. It is called petty cash book. You see, if you are writing WAEC, you're writing JAM, you're writing NECO, or you're writing any exam that is centered on accounting, you can't really do very well without an understanding of what petty cash book is all about. Because the examiner will want to know your level of understanding on petty cash book. So today we are going to take time to look at what petty cash book is all about. Now, we have what we call lesson objectives. There are things that will serve as guide or focus to our lessons today. Number one, by the end of this lesson, the student should be able to define what petty cash book is, explain the Imprest system and state advantages of petty cash book, describe procedures involved in posting transactions into the petty cash book, post transactions of petty cash book on Imprest system. Now, we have what we call success criteria. What will be our measurement? How do we know that we've been able to achieve our objective? Number one, when you are able to define petty cash book, you are able to explain the Imprest system and state advantages of the petty cash book. You are able to describe procedures involved in posting transactions into the petty cash book, and the last but not the least, post transactions of petty cash book on Imprest system. Now let's look at what petty cash book is all about. Petty cash book is a double entry book for recording small disbursement or expenses. Now let's emphasize on the word petty. When you hear of the word petty, petty is talking about minor, or another word you can call it insignificant. There are expenses that are not big enough to stand on their own in an organization. You see, in an organization where the transactions are major transactions, the likes of correction pen, the likes of office pen on the table might not, they are very important to the office procedures, but they are not big enough to be categorized as an item in a major account. So to reduce the burden of the main cashier, there is need to carve out a book where all these minor or little expenses can be categorized. And that book that is reserved for such category of expense or expenses is what we call the petty cash book. Now, I said it is a double entry book for recording small disbursement or expenses. What is disbursement? Disbursement is simply spending, or disbursement is simply the release of cash. Disbursement can also be seen as payments. So when money is released for minor expenses, there is a book that is used to account for that, and that book is what we call the petty cash book. Now, the rationale behind the system include, number one, I have said it, that there are different payments in the organization, but we just want to group minor expenses together and see how we can account for them. So the very first rationale behind the petty cash book is that it will reduce the numerous cash payment for small expenses. So many payments are made, and then if you don't look for a way to group these payments together, it will be bulky, it will be labor intensive for the accountant. And then the second thing is that the maximum number of level of cash held is fixed, and then the cashier must be reimbursed for the amount paid out. What do I mean by this? There is an amount of money that is expected to be reserved for minor expenses. The officer or the man in charge of the office should have an idea of how much we'll be able to foot the expenses that is expected of an office. If I as an officer, I should be able to know how much do I need to be able to take care of the office procedures, assuming for a month. So if I should have an idea, then this will be communicated to management. I cannot say, okay, management, in this office, what I need is 200,000 for a month. That 200,000 should be fixed. So, and the money that will be released to you is going to be released to you based on the expenses you are expected to burn in the office. So I said the maximum level of cash held is fixed, and then the cashier must be reimbursed for the amount paid out. At the end of the month, he is going to compare the amount received with the amount paid. Now, the amount that is paid out will be reimbursed, or will be given back to the petty cashier. And the last but not the least is what we call the source document. The source document for petty cash expense or expenses is what we call the petty cash voucher. You see, what we call source document is what we call documental evidence, or what we call objective evidence. In accounting, objectivity is a key word. If you are going to buy anything, we want to know, we want to be very sure, because accounting is a discipline that has to do with some level of manipulation. People manipulate figures. So to reduce fraud and falsification of figures, objectivity is a key word. So source document is always an objective evidence to prove the reality of a transaction. So, but when it comes to petty cash book, what we want to look out for to be very sure that money has been spent is what we call petty cash expenses voucher. That voucher is more like a summary of all the money that has been spent and the receipt of each of those spending. You went to buy fuel, you went to buy stationaries, you went to buy all of these things will come with an evidence. So the evidence or the source document for petty cash book is what we call the petty cash expenses voucher. Now, there is a fundamental system that is used to describe the petty cash book. It is called the Imprest system. The Imprest system. The conventional system for recording petty cash transaction, which is generally adopted, is called the Imprest system. What then is the Imprest system? Imprest system is simply a system whereby an amount of money called the float is given to the petty cashier at the beginning of the period. What I mean by at the beginning of the period is this period is very, very ambiguous. It varies with companies. Some company will say 1 month, some will say 6 months, some will say 1 year. But the principal thing we need to understand is that this money will be given to the petty cashier at the beginning of the period, from which the petty cashier can now make payments. And then I have said that this money is called the float. The word float is derived from the marine word. You know, we believe that anything that is thrown on the surface of a liquid does not have direction. It can move to any direction. So it is with the cash given to a petty cashier. That money does not have any direction. Even the main cashier, at the point of releasing this money, the main cashier cannot tell the petty cashier what to do. It is believed that the petty cashier knows what to do with this money. That is why they call it a float. Because the petty cashier is the only person that has what it takes or the technicalities to spend the money. So it is called the float. And then this amount should be sufficient enough to cover the estimated petty cash expenditures for the period. Now, the last thing I want to explain about the Imprest system is that at frequent intervals, it must be reimbursed for the cash disbursed for the period concerned, bringing the cash balance to the normal or the former amount. You gave the petty cashier 200,000 at the beginning of the month. Let's assume it's on a monthly basis. And then the petty cashier was now able to spend 150,000. That 50,000 that is left with the petty cashier is what we call the balance. And then at the end of the month, the petty cashier will now present the petty cash expense voucher indicating expenses paid out, and then the main cashier will now reimburse that 150 that has been paid. That's why I said at frequent intervals he must be reimbursed for the cash disbursed for the period concerned, thus bringing the cash balance to the former amount. Let's make progress. Now, this system can actually be of benefit to a company. Now, some of the merit or advantages of petty cash book include: number one, the risks of fraud will be eliminated. If you don't categorize these expenses under a particular book, you will see that some of them are so insignificant that people will do away with it. Somebody can just manipulate the amount spent on correction pen. Just maybe the office need a packet of correction pen, and if there is no book where this expense is documented and you want to match it with the expense of your organizations that are spending millions and billions of naira, you are matching it with an item of about 10,000 naira. You can see the difficulties involved, because at the end of the day, you will see that if proper account is not given, these expenses, which will not be even up to 100,000, will not be significant enough to be recognized. So, but with this system, fraud can be eliminated. The second thing is that it reduces the numerous cash payment for small expenses. Imagine you begin to list out, you are buying fuel, you are buying stamp, you are buying envelope, you are buying, all these expenses can actually be categorized. So, but with the petty cash book, we'll be able to group them together and call them minor or small expenses. And then the last but not the least is that the burden of the main cashier will be reduced. This cashier is also a human being. He or she needs some level some level of leverage. If you don't create a system where some of these expenses can be taken care of by another person, because of the bulky nature of the transaction, the petty cashier may not be efficient, and the main cashier will not be efficient enough. So for the sake of efficiency and effectiveness, there is need to reduce the burden or the job description of the main cashier. So I said it's going to reduce the burden of the main cashier. Now, looking at the procedures, there are ways to go about the posting of transactions into the petty cash book. I'm going to take time to explain this because this is where students usually find it difficult to understand. Number one, you credit the cash book with the check drawn on the main cash book and debit petty cash book with the amount of float. What am I talking about? I said from the beginning that petty cash book also observe the double entry principle that states that for every debit entry, there must be a corresponding credit entry. So when money is taken from the main cash book, that money will be credited to the cash book because cash book is given. And then when that money entered into the hand of the petty cashier, that money will be debited because the petty cashier is now receiving. So you are going to credit the main cash and what? Debit the petty cash book. And then the second thing is that you credit the petty cash book with payments and analyze them. What do I mean? I have said it observes the double entry principle that states that for every debit entry, there must be a corresponding credit entry. In accounting, we have a very simple anthem. Our anthem is that debit the receiver and credit the giver. Whoever gives must be credited and whoever receives must be debited. So we give to reduce and we receive to increase. So because of the fact that the petty cashier is receiving this money, he will be debited at the instance of getting this money from the main cashier. But when expenses are made or when payments are made from the petty cash book, the petty cash book must be credited. That's why I said credit petty cash book with payment and analyze them. What I mean by analysis is that describe the payment. What did you pay? What did you pay? Or what did you spend the money on? If it could be fuel, it could be transport, it could be envelope, it could be stamp, but it should be what? Analyzed. The third one is that all payment made out of the petty cash book must be supported by authorized vouchers. I've said it from the beginning. Voucher is just a spreadsheet that specified transactions. So every transaction, every payment made on the petty cashier must be supported by an authorized voucher, because sometimes the main cashier may not be there to question what you are buying. So what they do is that when an auditor will come, auditor will have to take this voucher to go and find out if what you are saying is lie, because you can misinform the company. I spent 5,000 on stationaries. Meanwhile, what you actually spent was 1,000 naira. When the voucher will prove that you have spent 5,000 and 1,000, then the auditor will know what to do. So all payment made out of the petty cash book must be supported by authorized what? Vouchers. And the second to the last is that analysis column must be total at regular intervals and the total transferred to their respective nominal ledger. What I mean by analysis column is that, you see, this sometimes you can have 3 different expense or 3 different spending on transportation. So if you have a column for transportation, on the 6th of the month you spend 10,000 on transportation. On the 8th you spend 5,000, that's 15. On the 20th you also spend like 2,000, that's 17,000. By the time you add all of them together, the total will be transferred to what? Transport, transportation expenses. And that's what we call the nominal ledger. Nominal account is simply an account open for expenses. And then the last but not the least is that reimburse the petty cash every week or month using the Imprest system. I have said that you have to reimburse, like you have to give it back to the petty cashier. You just have to return it back, the money that he has spent. Now, so far we have explained what petty cash book is all about, and then we've talked about the procedures, we've talked about the Imprest system, and we also talked about the advantages. Now we want to quickly look at how we'll be able to post transactions. But before then, let me quickly give us a sketch of how a petty cash book looks like, and then thereafter we'll see if we can get some questions that will further explain the concept of petty cash book. Now, if you look at the board, you first of all write the title. Let me assume we are opening this petty cash in the name of ABC Nigeria Limited. So you say petty cash book of ABC Nigeria Limited. This is how it looks like. And then you have it ruled like this. Now, the first column you have here is the receipts. You have the receipt column. You have the voucher number. You have the total column here. Okay, the first one is receipt. Or let's start with date. You start with the date. Some textbook we write date before the receipt. Some we write the receipt before date. But I think we should start with date. And then this will be the receipt. This will now be the voucher number. This will now be the total. And then all this one from here down, depending on the number of expenses that are involved. Let's assume this is date. This is the receipt. This is voucher number. And then this is your total. Now, all these other columns, let's take it in a company that has fuel, transport, what again? Let's take envelope or stamp, and then let's take envelope or stationaries, yes. And then here will now be what we call it personal account. So these are the divisions. You see, these are the divisions. This is the credit side and this is the debit side. Now ask me, what is the difference between the debit side and the credit? Because the way if you look at it now, it's looking like a straight account. The difference is just from here, from the date column to the voucher number is the receipt side. While from the total column down this way is the credit side. So all these divisions, the fuel, the transport, stamp, stationery, and personal account, or what we call the ledger. This one is either personal account or ledger account, represent the various divisions. Now, if, for instance, if we have a transaction which we are going to look at just now, when the main cashier disburses the float, and the float is coming into the hand of the petty cashier, he or she comes here and put down the date, maybe at the beginning of the period, and then write the amount here. Because this one now, the petty cash book is receiving. So the amount will be written here. And then in the voucher number, there may be no number, because at this point, this money is what we call balance brought down or balance brought forward, money at the beginning of the transaction. And then the company will give a breakdown or what we call the rundown of how this money is on those items that this money is supposed to be spent. So this is just a sketch. We are assuming that the company has a policy of buying fuel, then pay money on transport, maybe transport of staff, and then stamp for the office, and then stationery for the office, and then these persons represent some minor debts that the officer might incur. You see, somebody can come to the office and then maybe take something and say, I will bring it back. Or maybe a transaction can also can go on in the office. So if somebody pay in money, then that is for personal account. If money is paid to somebody, that is also the person's account will also be recognized. So that's how far we can go with this sketch. So very quickly, we want to go to our exam guide to see if we'll be able to get questions that will help us explain further what we have said so far. Now, when you click on the exam guide, you see this that is showing on the screen, and then you see options for subjects. You see we are doing financial accounting. That is why account is clicked. And then when it comes to year, you don't choose a particular year, just choose random. So you'll be able to give us questions that relate to what we are doing. And then the topic's already selected, which is petty cash book. So you just click on get started. And then the system will bring all the possible questions that one can encounter under petty cash book. The number one question here said, the petty cash account has an Imprest of what? 36,000 Ghana cedis, and then a debit balance of 10,000 Ghana cedis at the end of the month. The reimbursement required will be dash. Very simple. What you need to do now, this 36,000 is called the float. That is the amount of money that is given at the beginning. And then they say a debit balance of 10,000. That means the petty cashier spend this money and he is left with what? 10,000. So you ask yourself, you were given 36,000, 1, 2, 3, and then what you are left with is 10,000. This one is simple arithmetic. Subtract what you are left with from what you were given. If you subtract 0, 0, 0, 0 from here, you have what? You have 6, and then you have 2. So what you have spent so far is what? 26,000. You were given 36,000 and then you are left with 10,000. What you have spent so far is 26,000. So the petty cashier will be reimbursed with what? 26,000, which is C. Let's look at the second question. They say a fixed amount of money set aside for petty expenses is what? Is the float. Let's make progress. The third question. They say use the following options, information to answer question 6 to 8. Taiwo is a sole trader who keeps his petty cash on Imprest system. The Imprest amount being 4,000. The following transaction took place for the month. Now, petty cash in hand, petty cash to Imprest, bought notebook, bought notebook 328, bought pay wages 914, bought postage stamp 375, pay to G Thomas, a credit of 536, pay wages 928, bought envelope 437, bought postage stamps 210. They said amount to be posted to the personal ledger. I have said it here. PA, or they call it ledger, is what? Any amount that is released for an individual is called personal ledger. So from this question now, very straightforward question, the answer is 536, which is what? C. Which is C. All right, let's see if we can still take one more. I said the sum of money given to a petty cashier, out of which small payments are made, is A/N is always float. It has not, the name has not changed, it's float. And then let's see question 5. Amount to be reimbursed at the end of the month. That's that previous question. If you look at that question, the amount that will be reimbursed, if you add all the expenses together, that is the amount that will be reimbursed. They said he was left with 4,000. Let's see. All right, how much did he spend? He spent money on notebook. He bought notebook. How much? 330. Okay, 320. Let's look at it. He bought notebook. He bought notebook 328, and then paid wages 914, and then postage stamp 375, and then paid to this guy 536, and paid another wages 928, and what again? 437. And then 210. If you add all of these together, whatever you will have as the answer, you subtract it from the value. You can, at this point, you can simply use your mathematical tools. You can use your calculator to add them together to be very accurate, to be very sure. 328 plus 914 plus 375 plus 536 plus 928 plus 437 plus 210 is equals to 3728. That's the amount of money that is spent. So the amount of money that is spent is 3. So what did they ask? Let's go back to the question they asked. The amount spent is what? 3728. 3728. This is the amount of money that is spent. Now let's go back to the question again, to that particular question. Amount to be reimbursed 3728 is A. That's the answer. The answer is A. 372, because that's the amount of money that he actually spent. Let's see if we can still take one more. Okay, they say amount spent on stationery. Very simple. Let's go back to the question again. Amount spent on stationery is how much? Now look at it. Stationery here involve those items you need. Okay, let's look at the second part of the question. The second part of the question is requesting to know. Let's look at it. That's question. Amount spent on, they say amount spent on stationery. Now let's go back to it. Let's go back to that question. The question, this is the information given to us, and then that one is requesting to know how much is spent on stationery. From this question now, the only two items that can represent stationery here, they are envelope and notebooks. So notebook is 328, and then envelope is how much? Envelope is 437. So this is 15, carry 1. This is 5, 6, and then this is what? 7. So the amount for stationery there is what? 765. Let's go if we have gotten the answer. So amount spent on stationery is 765, which is D. And then let's take the very last question, question 7. A petty cash amount. Okay, let's look at this one. A petty cash account has an interest of 6,000 Ghana cedis. If 2,000 were left, how much will be reimbursed at the end of the period? Very simple. I have stated it from the beginning that whenever you have questions like this, just subtract what is left from what you were given. You were given 6,000 and you are left with what? 2,000. So if you subtract, you have what? 4,000. So 4,000 Ghana cedis is the money that is left. That what will be reimbursed. So the answer is what? Is C. All right, so far we have looked at some possible questions to further explain the lesson. Now, from the beginning, we have defined what petty cash book is. We said petty cash book is an account that is open for petty expenses. It is open to take care of minor disbursement. And then we said that the petty cash has a very fundamental system called the Imprest system. The Imprest system is what is used to operate the petty cash book or the petty cash account. Now, what did I say about the Imprest system? I said the Imprest system is a system whereby an amount of money called the float is given to the petty cashier at the beginning of the period, from which the petty cashier is expected to make minor expenses or minor payment. And then at the end of the period, the petty cashier will be reimbursed. And then we said that this will help us to eliminate fraud. It will help us to group numerous expenses together, and it will also reduce the burden of the main cashier. And then we said the procedures that are involved. Number one, when the main cashier disposes the fund to the petty cashier, the main cashier will credit the cash book and then debit the petty cash book. And then expenses or payment made by the petty cashier should be credited to the petty cash account. And then I said the analysis column should be total, and it should be sent or it should be posted to the nominal account. And then we also made mention of the fact that whenever money enters into the petty cash book, it should be debited, and then when money goes out, it should be credited. And I also gave us a sketch on the board here where I said that the debit side is a part where you receive the money given to you by the main cashier, while the credit side is the part of the account where minor disbursement or payment are credited. So at the end of the day, you will compare what has been spent with what has been received. And then if what you spend is less than what you receive, whatever you have spent will be reimbursed back to you by the main cashier. So far, that is where we'll end the lesson for today.